Hey everyone in EPGD land, this is Eric Rodobois. We are recording a kind of impromptu message. This is 5 Minutes with Eric, EPGD Attorneys at Law, PA, doing business as EPGD Business Law, doing business as EPGD Law, and soon to be doing business as EPGD Tax Law. So one of the biggest shocks that a lot of business owners will find is if they have problems with their employment taxes, this is typically with the IRS, that then they receive maybe years later, maybe after the business has been closed for a while, a letter from the IRS assessing individual liability for tax issues of the company. So let's talk about this a little bit more. When a company has employees, now here's a trick question. What if a company has independent contractors and not employees? Well, the IRS can always come back, look at the job descriptions of the independent contractors and easily say, hey, you were misclassifying all of those people. They should have been employees, and so voila, all the taxes you should have paid that you didn't pay, now you owe it. Plus, plus, plus. So what this is called is the trust fund. Okay? The trust fund is where the government has deputized every employer in the United States to take the taxes from the employees. There's a couple different types of taxes that we take on behalf of the employees. We take employment taxes, which are federal unemployment, Social Security, and Medicare. And that goes into the different pots so that we can fund those programs. And then, of course, the employer is also responsible for doing withholding on the individual employee's income taxes. So at the end of the year, let's just use a simple example. We pay the employee $100,000, okay? Well, 7.5%, more or less, is going to be taken out of that. So now the employee is down to $92,000. And that $7,500, more or less, is going to go for, like I already said, federal unemployment, Social Security, and Medicare. Then the employer is going to kick in another 7.5%. So technically for the employer, it costs $107,000 to pay someone $100,000. Okay, that's the main motivation for all the employers who would rather have independent contractors on their books instead of employees. That's a whole different conversation. So then, so I've taken that money out. The employee is going to get $92,000. Then I have to withhold a percentage of what the employee is essentially prepaying for their taxes that are due next April. So that's why a lot of people get refunds, because they've overpaid throughout the year. And the government's really nice. They don't pay you anything for taking your money and using it all year round. They don't pay you any interest. Nothing. It's worse than putting it in a checking account. So anyways, now the employer has these obligations. So what happens if the employer does not follow their obligations for maintaining the trust fund, for taking that money on behalf of the government in trust and then paying it over and filing tax returns 940 and 941? And so the answer is the government can go after the owners, the managers, and anybody with check writing authority individually, jointly, and severally. So let's just say that Talia, Danielle, and I are 1/3, 1/3, 1/3 owners of a company. And let's say that Nancy is our office manager. And let's say that Jessica manages our bank account, right? So she has check writing authority. Potentially the IRS, and let's add another number to this. Let's say that we've had $1 million of payroll for the last 5 years and we haven't done any withholdings. In fact, we're just not even doing anything with the government. We're not reporting a darn thing. So the government finds out about us, they audit us, they figure this out, and then they come back with a big amount of tax that was owed, plus interest, plus penalties. And so this number, just in this example, in a modest-sized business that's doing $1 million a year in payroll, can easily end up owing the government millions of dollars. I'm not even kidding. And so these millions of dollars are then going to be, they're going to go after all 5 of us for the whole thing. Which means that if I'm broke, and Danielle's broke, and Nancy's broke, and Jessica's filed for bankruptcy, then Talia is the only one who started her next successful venture and has a whole bunch of money in the bank. Talia will be on the hook for paying the whole amount. Now, Talia can maybe come back later on and say, hey, Eric, where's your contribution? Hey, Danielle, that's not fair. But the point of the matter is, if you have employees or independent contractors that are misclassified, and should be employees, and you are not handling your tax obligations correctly, then you, your managers, and potentially anyone with check writing authority may be on the hook for up to millions and millions of dollars. Word to the wise, we call it the trust fund recovery penalty, something you need to be aware of so that it can never happen to you. If it does happen to you, you need to immediately call a lawyer. This is Eric Rodobois coming at you from EPGD land. Thank you so much. See you next week.